Hello. So today we are going to talk about why I chose whole life as my savings vehicle. So welcome to 2024. How exciting, right? God has granted us an opportunity to make it to another year. Many have not, and so we have to do our part in order to impart to those that are still here because He has preserved us for a greater mission. So let's get into why I chose whole life as my savings vehicle. Of course, we know that in 2008 that the market tanked, right? And many individuals lost their savings, a lump sum of their savings, especially those that were retiring. And so it was a really uncomfortable situation for especially many seniors because now they had to find themselves getting jobs and staying longer at their jobs or finding part-time gigs because they had to now make ends meet because they had lost so much of their money around their retirement age. So that's one of the reasons why I got out of the stock market is because, you know, it's a thing when you're investing your money into something that's uncertain. Yes, we're all hoping for the best, but the bottom line is it is unpredictable. There are other people pulling the strings, and so we as consumers really have no control. We can only pray and hope. And so that's one of the reasons why I got into whole life is because it allowed me to invest my money and to never have a loss and for my money to just kind of, incrementally take its time, but while doing so, compound in interest when we have our money in our 401ks, in our thrift savings, in our stock markets. It never compounds interest, especially after a loss. We're actually restarting and sometimes even starting below the bottom. And so that's, for me, did not give me that security that I needed for my family. And so I wanted to make sure that there was something there and not, half my assets to be lost because of an unpredictable market. Yes, you can take time to regain that money, but what if you don't have time to regain, as those that retired in 2008, right? They didn't have the time to regain that profit margin. Or you could be on your deathbed. You don't have time to regain those losses. And so in turn, that leaves your family with less of your hard work and money that you have saved up for yourself or them. And now, you have to take other parameters. And the other benefit that I actually love about whole life is the fact that you have living benefits. So if you are sick, of course, major sickness as a heart attack or a stroke, things of that sort, it allows you to be able to take from your death benefit, not your cash value, but your death benefit, which is typically more than your cash value. And so it really allows you to be able to, utilize that money for bills, your medical bills, your living bills. There are no stipulations as to what you can and cannot do. You can leave that money for, college savings for your children, to pay off your house, or even doing an experimental or holistic treatment for your treatment condition, right? And so it really allows us to have more flexibility. It's no longer death benefit, but it's now a living benefit. So you don't have to necessarily die for someone else to benefit, but you yourself now can benefit as you are living and hopefully be able to live longer because now you have the capital to be able to invest into various holistic or experimental treatment options so that you can restore your health. And the other parameter for me is the fact that there are two things. I wanted to save for my children's college fund, and what I didn't like in particular about the 529 is that it really restricted the amount of available grants that my children would be able to have, right? And so this allowed me to be able to utilize this, but not only having that restriction of a 529, where if they don't go to college or if they get a scholarship or if they go to the military, that you're still penalized if they don't use it for college, right? And so that was one of the things I didn't really like. Penalization as well as taxation, those really just don't work really well in my book. But, everyone is different. And so the other stipulation for me was the fact that as we progress more and more into the future, as we see the cost of living has skyrocketed. And in addition to that, many, many people are seeing now that taxes are increasing in every facets of our lives, whether that's gas taxes, property taxes, food taxes, etc. And so we know that in turn, our income taxes brackets are also going to be increasing. And so for me, I would rather pay those taxes now on my income versus 20, 30 years from now when I retire, or, not retire, but, restructure. So, that interest or that taxation is now going to be higher, and I would rather pay money on the seed. What is that phrase people say? I would rather pay money on the seed than the growth. Than the, what's that word? Than the harvest. That's what it is. Right? And so we would all rather pay taxes on a dime versus $1 or $10, right? Because we know that that is only going to take more away from our nest egg. And so I love the fact that I have the control of my money, the access to my money, and it is not linked to the stock market. And so I don't have to worry. Have to worry about a loss. It is nothing but gain for me, trajectory. It's not a instant growth, but it is a incremental growth, right? And so that allows our money to compound so that we can really, really benefit from that. So if you are interested and if you are looking for something that lines up with your values and beliefs, and that you are having stipulations with trusting where the market is going, where taxations is going. If you are having those type of questions, please reach out to me. Click the link below, schedule a clarity call with me, and let's see how we can get you squared away so that you can have a secure future for yourself, your family, and your business. All right. Thanks for joining us. Bye-bye.